Now, Bank is raising the alarm, are providing us with precise information on what's going on in the cryptocurrency area, and what they have to say is quite important, as once more they are predicting what will happen in this field in the upcoming months and years. And because of the state of the market at the moment, I believe that this is a very important video to see. Because, in my opinion, practically all of the good things that have happened in the cryptocurrency space over the past 12 months have been entirely ignored. Everyone forgets all of the positive news that has occurred in this space the moment price action starts to decline and a significant crash occurs. And that, in my opinion, is a grave error. I'd want to begin this video now. Now, with returning to the topic we recently discussed, the OCC. According to Bloomberg, the OCC stated that banks may retain cryptocurrency in order to facilitate the payment of blockchain network costs. This may seem insignificant, but it's very important. In essence, regulators are accepting gas fees as a standard bank operating expense and public blockchains as legitimate financial infrastructure. It's a subdued but unmistakable indication that U.S. institutions are now expected to use crypto rails rather than merely observe. Aoris from Crypto was the one who posted this, and he recently released an update. The OCC has authorized U.S. banks to keep cryptocurrency on their balance sheets for on-chain operations. Since 2020, this action represents the largest change in the banking industry's approach to digital assets. These days, banks can use cryptocurrency as a primary to test crypto-related technologies or to cover gas costs. We are beginning to witness a significant change from the big banks as a result of the ruling, which lifts years of stringent guidelines and permits them to interact directly with public blockchain networks. We recently received yet another significant upgrade. The Basel Committee is the source of that update. For this, the bank XRP was big shot. Here, the Basel Committee is reconsidering its stringent cryptocurrency regulations as major banks demand more useful guidelines and regulated stablecoins soar. This comes from a story in the Financial Times. Yes, I am unable to read it because I do not pay for their service. However, after the US and UK rejected the 1,250% risk weights that require banks to hold $1 of capital for every dollar of cryptocurrency, we do have subjective opinions that violate the Basel Committee's general crypto capital regulations, making it unfeasible and preventing banks from participating in Bitcoin and stablecoins completely. Exchanges for cryptocurrencies are unsafe. The size of the exchange is also irrelevant. One of the biggest cryptocurrency thefts in history occurred in February when $1.4 billion were taken from Bybit, the fourth largest cryptocurrency exchange by trading volume. Additionally, the majority of the top 10 cryptocurrency hacks in history have been caused by significant exchanges. So, aside from cold storage equipment, where do we keep our cryptocurrency? Since premium custody accounts are completely closed-loop systems that are intended to isolate and safeguard assets, iTrust Capital provides them, making them one of the safest locations to keep your cryptocurrency. And the best part is that digital assets held on their platform may only be withdrawn in USD that is connected to a US bank account. It lowers the risk of phishing and illegal transfers by preventing external wallet connections. You can sign up using my link in the description below, where you can deposit $1,000 and receive a free $100 funding bonus today if you guys want to access one of the safest places to lock up your cryptocurrency. According to the Financial Times, Chair Eric Thaddean acknowledges that a new strategy is required in light of worldwide regulatory rifts. Why is it important? This could lead to the adoption of cryptocurrency by banks in billions. I believe that this is completely in line with what the OCC just did. I do believe that many of the issues surrounding the major banks, particularly those pertaining to prohibitions on cryptocurrency, are improving. I'm thrilled about this because, once more, it's enabling all of the major institutions to begin investing in cryptocurrency, which is just what we wanted to see. We have seen an increasing number of large banks tell us, hey, we want to tap into crypto in a huge way over the past several weeks. We received some of the most recent ones on November 18th, for instance. As the first international bank to be approved, Amina Bank has obtained a license from SFC to provide institutional cryptocurrency trading and custody services. Additionally, we recently learned that BBVA, Spain's second biggest bank, would permit retail clients to trade Bitcoin and other cryptocurrencies back in October. We also received another one with SoFi Bank on top of that. November 11th is the date of this. They introduced cryptocurrency trading, becoming the first bank with a national charter to allow customers to purchase, trade, and hold cryptocurrency. Last but not least, DBS Bank and JP Morgan's Connexus, another significant one from November, are developing a new framework for tokenized deposit interoperability. Clients will be able to transfer digital dollars, similar to SWIFT for cryptocurrency, between Ethereum and DBS's network. Furthermore, these are only a handful of the headlines. I could get a couple more, I guess. Big banks are beginning to enter the cryptocurrency space, and it's occurring so frequently lately. It also makes me think of that video clip. And if you guys are aware, there's a video clip from October 30th in which Jamie Dimon, the CEO of JP Morgan, who has generally been very critical of cryptocurrency, clarified his position that it is real and that JP Morgan will use blockchain and stablecoin smart contracts to improve transactions. Look it over. Crypto is real. You can move things if you have a JP Morgan deposit coin, blockchain, and stable currency. There are smart contracts. It's all real. We will all use it to enable improved customer service and transactions. We will all use it to enable more efficient transactions. Who are we? In essence, it's the large banks. Once more, at this time, regulations pertaining to large banks are beginning to be clarified in order to test blockchain operations or access blockchain-based transactions. It is unmistakable proof that cryptocurrency is now beginning to be incorporated into the banking system. This upgrade is significant. As I mentioned at the beginning of this video, I enjoy the title of this video. Yes, the alert has been formally raised by Citibank. What do they have to say? Here, Citi CEO Jane Fraser breaks through the chaos as the cryptocurrency market panics. A customer needs to transfer money swiftly, safely, and simply over the globe, 24 hours a day, 7 days a week. Tokenization is that. International banks are very optimistic about RWAS. Look it over. Please explain your enthusiasm for tokenized deposits. Why may that be a better option than stablecoin? Yes, for the payment area. Look, it all boils down to what a customer needs. A customer wants to transfer money instantly, safely, and without complexity anywhere in the globe, 24 hours a day, 365 days a year. And tokenization accomplishes that. Whole markets are digitized through tokenization. And we've been putting a lot of effort into ensuring that we can meet the client's use cases. In order to transfer money instantly around the clock, we have been introducing additional marketplaces. The announcement was made that in addition to the dollar, pound, Hong Kong dollar, and Singapore dollar, we will be adding the euro today. We have the ability to provide digital token services with round-the-clock clearing. With the addition of 270 banks, we are able to transfer money not just within the Citi system, but also to other banks instantly and effortlessly around the clock. Therefore, I'm rather thrilled with the movement in payments. Believe tokenization best fulfills the use case of the customer. So, pay attention. Tokenization is the way of the future. Every market will be impacted by tokenization. When the CEO of one of the biggest institutions in the world tells us, hey, this is happening, I don't believe people realize how important it is. It is currently taking place. We are in favor of it and want to see it through to completion. Citi has been in contact with us on several times. The CEO of Bitwise recently cited a video that was uploaded from Old Coin Daily, which makes this even more bizarre. Yahoo Finance is the source of this. 1.7 trillion is the amount. According to Citibank, the Bitcoin liquidity crunch is coming to an end. Between now and the end of the year, the Bitcoin liquidity squeeze should become better. Hunter Horsley is here with us. I hope this video was enjoyable to all of you. If you would like more free stuff, then join the free description below and subscribe to my notifications on Twitter. Having stated that, I want to thank everyone for watching.